The major markets ended mixed as the third quarter earnings season kicked off. The Dow Jones average was the lone loser last week due to the concentrated impact of two poor-performing companies that pulled the average down. But it wasn't earnings that led to the losses. Rather, bad press on Boeing and Johnson & Johnson caused the companies to weigh heavily on the 30-company composite. At the sector level, energy and information technology saw the largest losses last week, while the remaining sectors ended nearly flat or significantly higher due to earnings and general optimism surrounding the US-China trade war as well as Brexit. Overseas, the United Kingdom faced the October 19th deadline for submitting the third Brexit extension as required by the enact. Prime Minister Boris Johnson worked down to the wire to negotiate a new trade deal ahead of the deadline, but ultimately was unable to garner enough support back home to avoid requesting an extension. In the end, Johnson submitted 3 letters to the EU. The first was not so much a letter, but rather an unsigned statement of facts with a copy of the portion of the Act that required the government to ask for an extension if a new deal had not been agreed upon by British Parliament. Along with the required letter was a letter from Tim Barrow stating in short that the first letter had been sent and that they would continue moving towards reaching a deal before the Halloween deadline. Finally, the third document was a signed 2-page letter from Johnson, which in effect argues against the request for the extension and stated that he has confidence that a deal can still be reached within Parliament before October 31st. As for trade news, after President Donald Trump reported that China would be purchasing $50 billion of U.S. agricultural goods, Beijing indicated that in order to fulfill the agreement, the U.S. would need to roll back the tariffs that have been enacted since the beginning of the trade war. Additionally, China threatened that any more U.S. involvement into the Hong Kong protests would be met with retaliatory tariffs. This came after the U.S. House of Representatives passed the Hong Kong Human Rights and Democracy Act, which requires an annual assessment of Hong Kong to determine if the region should continue to be viewed as a separate trading partner from mainland China.